ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right. Hello, everybody. It is the end of the week. It's Friday, and it is the 11th of March, 2022. A big welcome to everyone watching the call live from the LCMS Traders Club. And if you are watching the call delayed as well on our YouTube channel, make sure you do get into the club. We are taking on new members as well, so you can ask questions during the trading day as well, because we are in the trading chat ready to help out. Now, with it being Friday, we do have the USD CAD. We've also got oil in focus. I'll be touching upon the crypto markets at the end of the call, but firstly, I will be going through the US dollar index, and I'll also be discussing some movements in equity markets that we've seen this morning. And Kim Hong will also be going through what happened last night as well with the inflation data. Although, frankly, nothing too exciting, but we definitely still have quite a lot of opportunities in the markets taking place. And what I will do is share the risk disclaimer before we get into the trade ideas. And that is, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. So US dollar index. Now, I was going through it before the call, and we've got the daily chart up. So we did see a move higher as well. This candle closed early this morning at around 6 a.m. GMT +8. We did see that inflation did come in line with expectations on a month-to-month basis. Came in at 7.9% year on year, which is a very high number as well. And also to take in consideration that that is, lagging a little bit because the oil situation has been a recent thing with the invasion of Ukraine, with Russia coming in, happening around 2 weeks ago. So we could see some more impacts there, unless something dramatically changes. But for now, there's been around 4 attempts from what I've seen at negotiations, and still there's a lot of issues to be resolved before there can be an agreement and things can start de-escalating. So from a lower time frame perspective, we did see, so the release came out, we saw that hourly candle, it did make a breakout with that inflation. We did see it get through 98.23. Pullbacks were down to 97.76, and you could see that hit the low there around 8 o'clock, and then we did start forming a bit of a rally from there, which is unusual because sometimes we've seen in the past where markets anticipate a little bit of a beat on expectations with NFP, for example, and CPI, but we did actually see the data wasn't really low. It was in line for month on month, but the year on year seemed to be enough for inflows on the US dollar. But we still have this 98.23 to consider. And for now, it's been quite interesting just to see how markets have been moving as well. And what I mean by that is gold has done that. So it's not looking really super, bullish at all. We've seen some topping out just over 2,000 USD an ounce. This is the hourly time frame. There was an attempted break there, and there were some opportunities just with some gold stocks that I was monitoring, but it's been really very tightly traded in the range there. So I've had to leave that. And then one more thing I'll touch upon is the Brent crude price here. So we're actually coming down. So we saw highs at over 131, and that was only a couple of days ago on the 9th of March, and now we've hit the lows of 104. So that it's been quite a volatile situation. We're close to recent lows, and we have seen a small bounce. And again, some conflicting information about the OPEC discussions on when they will raise production. But they don't really seem to be super enthusiastic about that. So that would just suggest we could have some upside, but there's a lot of other things going on to consider with US production, but that takes some time though to restart. And they're talking to Venezuela. But when I looked into Venezuela, their oil is it's a lot harder to actually use as fuel. It's a lot thicker. So there's a lot of things to understand about the dynamics, that oil is not all the same, and that it takes a lot of effort and a lot of capital to be invested to restart projects in the US and also Venezuela. So I'm a little bit mixed on all. There are some opportunities in the markets if you don't want to trade this directly with some stocks. Woodside Petroleum I've mentioned, and that's what that's doing. I had a buy on that this morning, and that wasn't too bad. And then one gold trade that I did take, and it's still running as well at 26.85, and that's, as you can see, that looks like it might actually break down. So that is that from a individual stock position. We did see, I'll bring up the NASDAQ as well and how that behaved. It's been choppy, but it's not falling apart. We've seen it respect, 13,000. It did break down a little while ago in Feb, but it's still holding up okay. And it's going to be interesting to see what the interest rate increase is this month. It sounds like 25 basis points. So just consider that if it is a little bit higher than expected, for some reason, if things really cool down with this Russia-Ukraine situation. But for now, with the US dollar index, I think conservative for me will be just to leave it and let tonight play out. But it's more long side is what I'm looking for. But a pullback, below 98 would be nice to see for an entry. But for now, just pausing and letting things play out, really, because it's very volatile and it just sort of whips around, which can be very challenging to capture if you're not great with the timing. So those are my thoughts there. A little bit more of a sell-off on the US dollar would be nice to see for a long entry. Now, we do have Gim Hong here just going through the USD CAD and any trading opportunities that are around that pair. So over to you now, Gimmy.
I'm definitely looking towards the 25% basis point hike by the Federal Reserve next week. Actually, I'm actually hoping that they will be more hawkish than that, okay? But we'll see how it goes, okay? Even if we don't get a 25 basis point, I don't know, the forward guidance may actually be a change, okay? So, all right. So today we are talking about the dollar CAD. Let me get my chart up. Dollar CAD, if you ask me, okay, I would say that it's pretty straightforward right now, okay? So like Scott has mentioned, oil prices has kind of like taken a bit of a retracement, coming back down a bit, that kind of stuff over the past few days, okay? Nonetheless, okay, it's still high, okay? Both the Brent's crude and the WTI crude are still trading above $100 per barrel, okay? It's still really, really high. And we all know that, oil prices has actually a direct correlation with, it's actually directly correlated with the Canadian dollar, okay? So at the moment, this strong oil price will have a strong impact on, a strong positive impact on the Canadian dollar, okay? So that's one thing that can directly impact the Canadian dollar, okay? High oil price, okay? But now that oil price has pretty much, I would say, taking a back seat for the time being, okay, until further developments coming in from the Russia-Ukraine war, okay, we do have other things to focus on, okay? Like, for example, tonight, okay, this evening at 2130 is the release of the Canadian employment data. Actually, I'm just going to switch over to this screen, okay, to show you guys the data. Just do a new share and calendar. Okay, so 2130 Canadian employment change is expected to be is expected to be 132,000, okay, meaning 132,000 jobs will be created. Okay, it's expected to be created in February, okay, as opposed to the previous figure of negative 200,000 jobs, in January. Okay, meaning 200,000 jobs were being lost. Okay, were lost in January. So this is actually a strong rebound. Okay, if you ask me, this is actually a strong rebound from a negative 200,000 to a positive 132,000. All right. And moving on, if you were to look at the unemployment rate, okay, there's actually a slight decline, okay, expected decline from the previous 6.5% to the expected 6.2%. Okay, so if you ask me, okay, because this time around the Canadian employment data is not being released together with the US non-farm data, which was last week. Okay, so it actually makes trading easier. Okay, it makes trading easier. And look at it. At 21:30 GMT plus 8, there's no other news, major news that's coming up. Okay, so if you guys plan to trade the Canadian employment data, I would say this month's release will be quite a good chance to trade. Okay, moreover, we are expecting the employment data to be one direction. Okay, one direction meaning employment change is expected to do better. Okay, unemployment rate is expected to do better as well. Okay, aka a decline in unemployment rate. Okay, so if the release data, okay, were to be at least as good, okay, at least as good meaning as expected or maybe even better, okay, then these two figures over here, 102,000 and 6.2%, okay, then we will likely be seeing a one directional strengthening of the dollar CAD, okay, meaning if Canadian dollar would, one directional weakening of the dollar CAD, okay, because good Canadian employment data would likely lead to a strengthening of the Canadian dollar, okay, hence dollar CAD is likely to decline, okay, which brings me back to the chart, okay. So if you look at the chart, what is dollar CAD doing at the moment? Okay, it's actually trading upwards. At the moment, it's at 1.27893. Okay, it's very close. It's trading close towards the 1.28 key level as indicated by this blue horizontal line over here. Okay, so my hope is this. Okay, dollar CAD, okay, can carry on strengthening until the 1.28 level. By then, okay, hopefully it's close to the 21:30 GMT plus 8 time already. Okay, getting ready for the release of the Canadian employment figure. And then once the Canadian figure released, okay, to be at least as good, okay, or even better than the forecasted figure, we can expect a strengthening of the Canadian dollar, hence bringing dollar CAD back down from the 1.28 level. Okay, remember 1.28 is actually a psychological key level, round figure level. Okay, so normally for these levels to be broken, okay, be it upwards or downwards, okay, there must be a conviction. There must be the market must be convinced to trade dollar CAD, in this case, up above the 1.28 level, right? But if let's say we were to have yes, no doubt, yesterday we have a strong CPI from the US, okay, but that was yesterday, right? And today, okay, we have the Canadian figure, right? So if the Canadian employment figure, were to turn out as at least as good as expected, then that will be a reason for dollar CAD to not break above the 1.28 level, hence retreating back downwards. Okay, so we can see since 9th of March, yeah, 9th of March, I would say, since 9th of March, which is 2 days ago, okay, dollar CAD has been declining steadily, I would say, partly also because of oil price, the over $100 level of oil prices. Okay, and this time around, if we were to get a stronger Canadian jobs report coming in from the Statistics Canada, okay, chances are we will be seeing a further weakening of the dollar CAD. Okay, and the levels that I'll be looking at, okay, is this. Okay, I'll be looking for a sell entry at 1.277. Okay, and then my stop loss. Okay, in a scenario whereby dollar CAD fails to break above the 1.28 key level, okay, that means the 1.28 key level will be, I would say, for me, it's a strong level of resistance. Okay, hence placing my stop loss above it will give me a certain level of confidence. Okay, so my stop loss will be placed above the 1.28 key level, okay, which is at 1.281. Okay, of course, you guys can go higher than that if you guys want to be more conservative, more, be on the safe side and things like that. Okay, but for me, 1.281 would be a decent, would be a good enough figure, good enough level. Okay, and then my potential take profit would be at 1.273. Okay, note that Canadian dollar, okay, whenever it moves due to economic data, be it Canadian employment data or Canadian CPI, GDP and things like that, or even interest rates, okay, the Canadian dollar tends to have pretty strong reaction, okay, meaning, if let's say the data tonight comes out to be better than expected, okay, chances are we can actually expect the Canadian dollar to move quite a big amount, okay, not only dollar CAD, but even CAD yen as well, or even other cross pairs, other Canadian cross pairs, okay, so which is why I'm confident, okay, that the TP of 40 pips at 1.273 stands a good chance to be hit, okay. Now, what if, okay, there's another scenario. Look, my entry level is at 1.277, okay. What if the dollar CAD, okay, from now until maybe, just before the release of the data later on, continues to move up to 1.28, okay, and then a bounced off. So from 1.28, a bounced off to 1.277 is some 30 pips, okay. Now, some of you may actually find that it's a bit far, okay, 30 pips from 1.28 level, okay, a bit far for your entry to be triggered, okay. So if prior to the, just probably like say 15 minutes to half an hour, 15 to 30 minutes before the release of the Canadian employment figure, you see that dollar CAD, okay, were to move, let me just draw a bit of a line, okay, were to move upwards up to the 1.28 level, all right, and then if the data turns out to be better than expected, we are expecting a bounce downwards, okay, a bounce downwards from the dollar CAD, right? So if you guys don't want to wait for the 1.277 level to be hit before entering a sell trade, okay, you guys can actually consider something higher, right? You guys can actually consider something like a 1.278 or even 1.279. Okay, I will put it at 1.2785 for now, okay, because it really depends. 2785. It really depends on on how price move later on today, and of course prior to the release of the data. Okay, so I will place a, actually, you know what, let me just change the color to something different, maybe like a red. Okay, red. So this red dotted line, which is at 1.2785, okay, is another potential sell entry level that you guys can consider prior to the release of the data. Okay, so if let's say, okay, let's just simulate the whole situation. Okay, right now, suppose it's 10 to 15 minutes before the release of the data. Okay, and then dollar CAD is actually trading at the 1.28 level, but stagnating. Okay, meaning it's just ranging across, trading around the 1.28 level. Now, if you guys want to take a bet, okay, meaning if you are expecting the Canadian employment figures to be better than expected, to be positive, hence leading to a strengthening of the Canadian dollar, okay, you guys can actually place a sell stop entry, okay, a pending order, a sell stop entry at the 1.2785 level, okay, and then just minutes before the data release, okay, and then once the data is being released, if it turns out to be a stronger than expected, or even a stronger, as expected, or even a stronger than expected figure, okay, then likely we are going to see dollar CAD just move downwards pretty fast, okay, and doing so, okay, will actually trigger your sell stop entry at 1.2785, okay, and then from then on you will have to supervise your trade closely, okay. It may or may not hit the 40, or by then it will no longer be 40 pips, okay. This 1.273 TP level will likely be like a 50 or 55 pips kind of take profit, okay. So my suggestion is, if you guys are trading this way, supervise your trade carefully, okay? And because it's, I would say, a high impact news, okay, there may be a strong retracement as well, okay? So if it's a short-term kind of trade, you know, go down to M1, the M1 time frame, or even M5 time frame, okay? And if you guys feel that, you know, if you guys find that prices are stagnating, starting to slow down in momentum and things like that, my suggestion is, you know, close your trade for the profit for whatever amount. It can only be 30 pips, it can be 35 pips, or even 20, 25 pips and things like that on profits, okay? Close your trade for the profits and end the week, okay? End the week positive rather than, you know, holding on to hoping that it will reach the TP level, okay? Because it may be a bit far by the time dollar CAD actually retrace back up to 1.28, because it may even be slightly higher, like maybe 1.281 or something like that, okay? So that's how I would trade the dollar CAD's employment data released tonight at 2130, all right? Do we have any questions at the moment? And another thing, seriously, don't hold this dollar CAD trade over the weekend, because you know, because of the ongoing Russia-Ukraine war, okay, any kind of developments may have, you know, may have an impact on safe haven currencies, okay, like the US dollar. And then since you're trading dollar CAD, okay, you know, it may actually cause the dollar to strengthen for, you know, whatever reason, for maybe safe haven purpose, okay. Market participants may actually take on a risk-off sentiment, okay, hence leading to the strengthening of the dollar against the other currencies like the Canadian dollar. Then, you know, your profitable trade will eventually be turned into, may be turned into a break-even trade or even a stop-loss trade. You know, when the market opens next Monday, okay, there may be a gap up and things like that happening, okay. So my suggestion is, you know, take up this trade if you guys want to trade later on tonight, and keep it short term, okay, maybe a few minutes, just close it for the profits, and that's it, okay. So that's how I would trade the dollar CAD for now, okay. Any questions regarding this dollar CAD trade idea? Okay, if there's no questions, I will hand it over to Scott for his analysis on cryptocurrencies. Okay, over to you, Scotty.
All right, thanks, Kimmy. And we'll get into Bitcoin just to start off with. So this is against the US dollar, and just on the daily chart, what has been going on is talks of Bitcoin, you know, being a, you know, an inflation hedge has sort of been somewhat dismissed, just really with what we've been seeing, this downtrend develop. But then there were talks that we could see a little bit of a lift in Bitcoin, just with the use in Russia and people looking to move money out of Russia using Bitcoin. That hasn't really happened either, as you can see, just with the price still not looking, I mean, below 33,000, that's when we could see some more selling, but we have seen this hold, has slightly made high lows here as well, just with the wick. So it just seems that for now, with the uncertainties, like we've seen with gold as well, price is just sort of holding this range. I mean, it's a little bit wider, so we're pretty much smack bang in the middle. We have been at 40, so we have come off a little bit. So it sort of looks like we might be headed down again. And 36, 35, we've seen some liquidity there. And the volumes have sort of been not too bad. You can see the bottom there, but there's nothing that jumps out at me. So how really I'm looking for this from a longer term perspective is that we see some more selling. So 28 or so, and then maybe even 18. And I just want to see how markets react to this year in particular is going to be from a standpoint of, we've had all this stimulus and now there's a lot of inflation pressures. So some people are saying recession, some people are saying it's going to be like it was in the 1970s and stagflation and the oil price. Or we see the world sort of come together and work out the oil situation. If Russia continue to sort of be on this focused campaign of trying to reclaim areas and try to just ease pressures that they feel that NATO and and other countries in the EU are sort of putting on them. So it's a very hard situation, and I just don't feel comfortable getting into Bitcoin right now. I have in the past, and I've been looking to get into it again, but I'd like to see more of a discount. So really 18 would be fantastic, but I'm realistic. I think 28, 29 is where I'm sort of focused on. So I'm just leaving it for now. I've had a couple of attempts at breaking down, but not yet. And Ethereum is similar, as you can see. So I think really 2100 is sort of what I'm looking for. But if not, maybe 1700, and we'll sort of see how that plays out. But there's a few things to watch for with the oil prices, inflation, interest rates in the US. So there's all sorts of things to look for. And I think I'm just going to gather some more information before deciding to jump in on these, because I more look to sort of get in and leave it, but I still see some more downside taking place here with Ethereum and Bitcoin. And those are my thoughts there on crypto. So thanks everyone for watching. Make sure to feel free to ask questions in the chat for the LCMS Trader Club members, and hope to see everyone on Monday. Have a great weekend, and thanks for joining us, everybody.